Hello everyone and welcome to Elliott Wave Cafe. It is Saturday morning here in Chicago. It's almost 10 o'clock. I'm recording this macro cafe video for you guys. We have lots of things to talk about. Hopefully I'm not going to keep you too long. It's a beautiful day outside here. It's sunny. It's a bit cold. Probably gonna go for a walk a little bit later. Spend some time with the family, but I wanted to kind of get this out to you guys, and let's get going. Before we get started, as always, I'm your host the Cowboy. This is Elliott Wave Cafe. Let's get started. All right, so macro cafe. Let's see what we're going to talk about before we jump over and take a look at the indices. It's been some tough navigating here these markets. We've been having quite a bit of volatility here. VIX climbing as high as 28, even 29, I think. So we've had some bank failures. Inflation is still pretty high. Fed is continuing to talk about raising interest rates. So it's been a pretty tough environment here for both the bulls and the bears. There's no clear direction yet in this market. So we'll jump and take a look at some of the counts that we have. Before we do that, I want to show you quickly where you can find me. You can find me on Twitter. It's one of the easiest ways to kind of get in touch with me and follow me up here in the commentaries and everything at Elliott Cafe. And then you can also, if you haven't subscribed already, or if you're new to these videos, go ahead and subscribe to the Pigeon and the Statue. This is my free newsletter, and I the daily analysis here through the daily drip on all the core markets that I'm watching. There's a lot more that we cover, in our daily videos in the Pro Room, but this newsletter will pretty much kind of keep you up to date on on the major markets here, so you can, this should hit your mailbox every single morning, and you can kind of read my latest counts and commentaries on the market. If you wanted to take a look at, some of the videos that we're doing up here, you can find them under the video library. This is the Macro Cafe videos, just to kind of see what we're watching. And then there's a strong pigeon report this one looks basically at the markets around the globe and the dollar, U.S. equities. Just kind of goes in details about the performance of all these market every single week. And I think you can kind of follow along and kind of stay in touch with, how some of these patterns develop, some of these candle patterns, and where everything kind of stands at the end of every single week. So, go ahead and subscribe up there, and you'll get notified. All right, let's jump over and take a look at the charts. We're going to start. So we're going to talk about the Dow Jones. We're going to talk about the Nasdaq, SPX, XPX. We're going to talk about the Russell, and then I want to also talk to you a little bit about the financials, because the financials were the one that kind of threw everything down the drain this past couple of weeks with their major sell-offs in there. And then we'll jump over and also take a look at Bitcoin and see what Bitcoin is doing, because it's been rallying here super nicely from 20K. We're almost at about 28,000, and it looks to be pretty well bid up here. So let's start with the Dow Jones. Basically, if you can take a look at the 200-day moving average, this one continues to be pretty flat. When you have a flat 200-day moving average, you have no trend in the market. You have basically a sideways consolidation. There is an equilibrium here between the bulls and the bears. Everybody's trying to figure out what the next catalyst will be for the bear side, for the bull side. So there's a lot of fight kind of going on in here. I'm looking at this with a bullish perspective. I think that back in October 2022, we found a major low in the markets. The sentiment back then was quite extreme, and I think since then we've been trying to recover. There's things that we watch underneath the surface by looking at breadth, by looking at relative strength in different sectors, and they continue to point to a Wall Street that is accumulating basically positions, I think, towards the technology, communication, maybe even consumer discretionary sector, starting to dump a little bit these financials, industrials, materials. I can't really get a lot into discussing, recessions and whatever the Fed is going to do. I'm trying to stay focused on the price, but it looks like, from what's been happening lately and kind of what the Wall Street is buying in here is telling us that they're getting ready possibly for a recession, possibly for a rate cutting cycle, and they're trying to kind of get positioned for the next bull market. So Dow Jones in here, we're looking at it. I'm looking at it from the perspective of a flat, with this being a wave A, that's a B, that's a C, and you can see that pretty well into the wave count. And this is the cash market. So correction completed in a second wave back here in October, then a pretty strong rally that overtook this prior B wave high. And we've been kind of monitoring this ever since we made this little dip. I thought that it was a little bit short, and here we are trying to get a little bit more proportion into this decline. It looks like that's a flat in A. You go up in B, and then you start to do a 5-wave decline in this wave C. There still could be maybe a little bit of weakness in the Dow Jones moving forward. I don't think I have a appropriate size 4th wave just yet, so maybe this still develops into a triangle maybe for the rest of the month, and then we're going to have one more drop into a 5th wave, possibly into the 61.8, and then from there we're going to look to see if the markets can actually start to recover and move back to the upside. But truthfully, until you're starting to kind of get some of these key levels out of the way, like 33,570, maybe even the top of this B wave, we won't get a lot of confirmation until those moves kind of start to happen. So that's why we'll monitor. The deeper this goes, if it starts to break below 61.8 and 78.6, then we could be looking at possibly another decline lower and an overtaking of October lows in here. But that's going to be the clue. Just watch the 61.8. So that's basically on the Dow Jones. Now let's take a look at the S&P 500, and then we'll take a look at the Nasdaq and the Russell. So the S&P 500 here, it's been looking good since we've broken above this trend line, and then we came back and retested it, and it started to have a pretty decent proportion as a 1-2-1-2. And this fell apart because you're starting to push lower and break below the trend line again, and also get this second wave quite deep. You can see in here we have retraced about 88.7% of this wave 1 minute. So from a 1-2-1-2 perspective, this is an extremely bullish count. It's an extremely bullish count because that means that this third wave should be very aggressive and, should unleash a lot of buying into stocks. By the way things are looking right now, it doesn't feel that way. And it doesn't look like that's possible to happen, right? If you look at some other markets, which you take a look soon, you will see the difference. Now, I'm going to keep this count, obviously, until this 3764 gets taken out. But just so you know, my level of confidence in a 1-2-1-2 has been greatly reduced because of the size of this wave 2 and kind of how deep it came. And the closest alternate I would still have to a bullish count would be this back in here, which I usually talk about into those daily updates, is this flat scenario where, I still have this as a 1-2-1-2, but you can see the alternate back in here. So that would be the bottom of the wave A. That's the top of wave B. And then we're doing a 1, 2, 3, 4, and 5. In a wave C that completed already, and we're beginning in a 1-2, maybe 1-2, or we're building a leading diagonal in here, and we're going to start to kind of get out of here. The clue that this is possibly done, it's this 40-80 right here, 40-100. It's a key zone, that level that's been touched, several times in the past. I mean, you can see the swings in here, and where the market find, quite a few levels, and quite a few areas of resistance where, we kind of sold off from. So that 4100, it's very important. So if we can climb back above that, I think that the flow will start to change to the upside and will start to move higher in this, either this larger wave 3 of 3, or, we're beginning straight up in this kind of minor wave, and this wave 1 then will have to be moved from where it is right now into this position. You know, if you're starting to kind of climb back, right, if this becomes a flat in this wave 2, that means that, you know, the wave 1 will be a 1, 2, 3, 4, 5, so you will be somewhere up there, and then you'll do a wave 2 like that, and then you go. So this wave 1 will basically move to a new place, right? That's the lower degree count on there. So that's what's going on in you know, in the S&P 500. So I'm waiting for these levels to get taken out and see if that happens. Now, if you can still break a little bit below in here, and this flat formation can still be valid, right? So I just don't think that that's going to work based on the structure, because we have already retraced quite a little bit from this level, right? So there's not enough room to actually build a C wave, let's say in an A, B, and then to still come lower below these levels. I don't have a count back here that would allow for that. It would have to be maybe a 1, 2, 1, 2, 3, 4, 5, 4, and 5, maybe like that, but it's a little bit of a stretch. And it's not gonna look too good. So, you know, if you wanted to break below this 37.64, I think it had a chance to do so. If we are breaking below these levels, then we're gonna have to shift to something more towards the bearish side, where this October 13 lows will probably get attacked. If you're breaking this 37.64. Right, and you'll see kind of what I mean by that by looking at the Russell, and you'll see kind of how that's going to look. So this level here, it's very important, and also this back in here. So two levels that are going to dictate what's going to happen, you know, likely next with price. Now, let's take a look at the NASDAQ. So NASDAQ looks a little bit better in here. You can see how, you know, we are getting, you know, a little bit further from the 200-day moving average in here as well. And it's still very flat. We need this to kind of start to turn back to the upside. But listen, you know, just like just like a top takes a little bit a while to form, just like a moving average, you know, at this length gets some time to turn to the downside. It also takes some time to turn to the upside. That's why. You know, that's why sometimes there is no real big rush to, you know, either catch a top or catch a bottom, because it takes time for the price to kind of work itself through the top and the bottoming process. Most of the times that's what happens. So you can look at the 50-day moving average, you know, at the 200-day and just kind of give them time to work out and see kind of how price works in relationship to that, and then monitor some of those levels. But this looks a little bit better. There's a lot of buying in the NASDAQs, and here is kind of how the count looks in here, right? You have a completed correction again back in October. You're moving up in a wave 1 minor, 2 minor, 1 minute, second minute, just close to the 61.8, retesting the broken trend line, and then this market is basically severely outperforming the rest of the markets. So there's a lot of buying that's happening in the tech, in the large tech, and you know, this shows you basically that appetite for risk from Wall Street, right? If you throw away financials, you know, things are not looking that bad. So why are they buying this market, and why is this looking, you know, more bullish than the rest of the market? So that's a big question for me. Still, I would like to see this 12,880 get taken out. I would like to see this 13,720 get taken out, and the market to kind of start to build a more impulsive move, you know, to the upside in here in a 3, 4, and 5, maybe back towards this kind of 16K. It will take a while. It will take some time. But here's what I wanted to show you on that. So if I go up here, you will see that this is the Qs and the relative performance and the ratio between the Qs and the S&P 500, between the Qs and the Dow Jones, between the Qs and the Russell. And look at what's going on in here, guys. I mean, these are major breakouts. Obviously, the Russell has been killed, right? Because the funds basically rotated out of financials, out of the Russell, back into the technology sector. And look at what's happening in here. These markets are basically ripping to the upside. And I think that's a very good signal for the market. So I just cannot ignore the fact that this is, this is happening underneath the surface here. The other thing that I wanted to show you when I was talking about the S&P 500 is the bullish percent index. So I'm watching, I call this the important charts. I have, 30 or 40 charts in here that, go through, a lot of data regarding breadth, volatility, sentiment, stuff like that. And look at the bullish percent index. We're starting to kind of get back into a territory where, you're usually getting pretty serious bounces from. So the blue lines here are kind of some major lows back in the market with the bullish percent index. But anytime you're below 30, you have to kind of start to pay attention to the upside, just like when you're above 70, you kind of start to pay attention to the downside. So for me, this is a very important indicator about the direction of the market overall, and kind of how these reactions kind of happen, and kind of where most of the stocks are positioned, right, on the bearish side right now, and that's when you kind of get a tilt back to the upside. So anyway, back to the counts in here. Again, I remain pretty bullish on the Nasdaq. Pretty nice reaction out of here. You can see how we've broken above this trend line. We've broken above this 12,455, and the next move would be above 12,880, and that will increase my confidence that this could continue further up. Now Russell is the one that's been pretty ugly. So you have probably a lot of this, banks in the regional side, smaller banks, things that actually have gotten killed in here and have put a lot of pressure onto the Russell, right? There's like 2,000 stocks in here, small mid caps. And the fact that we have broken above the 1722, it is concerning for this index. Now, you can be bullish through a flat formation, an expanded flat here, let's say in an A, B, and then down in C. We have a couple of problems. First of all, this is pretty impulsive. And then this wave 2 is quite large as well, right? So this drop. So if this market is to turn back to the upside, it will do so from the current levels, or just maybe a little bit more of a drop into next week, but not much. And then you got to start reversing aggressively to the upside. You got to have to start buying. If that doesn't happen, we're very likely that the 1641 lows are going to get taken out, and that's an ABC, and you're moving lower. Okay, so kind of how do I judge this? Well, I usually do a retracement back in here, and let's say that we'll give it a little bit more time to kind of break. If that's a 1, 2, 1, 2, 3, 4, 5, 4, and 5, maybe there is a little bit more of a drop into next week, or maybe into the end of March in here. And then if you start to rally back above 1800, start to go back above 1843, I'm going to start to think that this is probably a flat formation. Most of the confirmation will come if you're passing this 1880, which is the 61.8 retracement, because until you're actually taking that, this could be a wave 2 of a bearish count, and then you can move to the downside. So this index is basically in trouble. The bulls have a lot to prove in here, and they need to kind of reverse the prices to the upside. And the bearish count that I have on the Russell, I have a couple of them. Let me see if this one is still, so this one, it's the kind of the more bearish one, where this is, let's call it a leading diagonal wave A, that's a B, and then you're doing a 1, 2, and you're starting in a 3, 4, and 5, and this can take it back to 1400, and it's got a lot more room to fall in here. All right, that's basically, you can be above the wave 1 low, and this can take it, such a development, I think, can last until the fall or the end of this year, if this is what we're going to be getting. The other one that I have that's a bit more, let's say, I don't know, maybe a little bit more reasonable, without such a big forward crash, would be a move into the 61.8 in here, and that is through an ABC. So you have a 1, 2, 3, 4, 5 for A, then up in B, and then you're doing a 1, 2, 3, 4, 5 for C, and a W. You've done an X wave in here. That's kind of a failed rally. And then, I mean, you can also pull this back here. I don't have a problem, and you can do that as a flat and an ABC. It's irrelevant at the moment. And then this is an A, so just a 1, 2, 3, 4, 5 for an impulse. That's a 3-wave setback. You have basically an impulse in here. You have an A, B. You have exact equality between A, B, C in here into 100% into this B wave. So these waves are equal. And then you're beginning a C wave decline. Now, just so you know, the moment you break below 1640, you have basically satisfied the requirements for a C wave. And if you have a 5-wave move, right, then let's say that that's a 4 and you're doing a 5, then this wave could be done right here, and then you can begin to turn back to the upside, and this becomes a WX, and then you have your ABC and becomes a Y in here, and then you continue to go higher. So to me, this is a little bit more reasonable, and we will have to watch kind of how this unfolds. But I think that by the way this looks, they would want to take this lows. Now look at this. This is a massive zone. Okay, there is a lot of supposedly demand back in here. It's not going to be that easy to crack through this guy, right? There's going to be a lot of bids placed into this one, just because some traders will just trade ranges. You know, they'll be like, you know, I don't care about your counts, I don't care about any of that. You know, I'm looking at the market, I see that they've held back in here, so I'm going to place bids, and I'm just going to play it and just get out if they break lower. And they're going to say, nope, man, we're going to go higher, and who knows what this is going to end up being, right? We're going to play this game all day long. So that's why do not ignore the fact that you're coming into a strong zone of support. It can, you know, a lot of things can kind of happen from here. But in terms of counting, that's kind of how I see it to the bearish side. And, you know, with a little bit, obviously, with a little bit of a stretch for some kind of a flat in here. And then you can start to push back to the upside. Who knows? Maybe the Fed will cut, or maybe they will not raise, and this market, right, reverses back to the upside. The financials are not looking that good. So I don't know how that's going to happen, but it is something to definitely watch. So now let's take a look. Wow, this video is running a bit longer, so let's get through. I think I covered the indices in here, so let me just kind of take a look quickly at the financials. And I mean, look at the sell-off. And let's take a look if I placed some counts in here. So, I mean, the sell-off here, it's been pretty aggressive, and that looks like a third wave, right? And, you know, just like I was talking in the Russell, I think that this 29.59 lows are probably going to get taken out. There might be, you know, a fourth wave in here. Maybe this still drops in a third. We're probably going to be doing some kind of a fourth next, maybe some consolidation in here, and then maybe one more drop, and that could finish actually wave C back here, and you have a 1, 2, 1, 2, 3, 4, 5, 4, and 5, and you have a completed A, B, and then down in C, and then, you know, you can start to kind of get back to the upside on the financial side in here. But you know, if you want a bit more proportion, let's say you have to do some kind of an equality between wave C and wave A, and that comes in at about 26.33 on this log scale. Let me go to a 2-day chart, right? And for this to happen, you know, you would probably need to have some kind of, you know, it would have to be, maybe this would be just wave 1, right? I mean, look at that. You would have to have a smaller, because you would have to secure this wave 5 on there, 4, and then it would have to be maybe something like that, right? 1, 2, maybe a smaller 3, 4, and 5 to reach that. I don't know if, you know, that's quite, you know, looking good. But we'll kind of keep an eye on it. I mean, the other way that this could be looked at, it's just like in the Russell, right? If you already have a low in the financials, and this was some kind of an ABC in here, you know, then that's a 1 ABC of a flat and you're moving higher. Now that's, I know that's a stretch because, you know, the C wave is so deep, and you would basically have to get a lot of buying in the financials to do that, right? A, B, C right here without taking this guy out, right? And this is a massive, let's say, expanded flat, and you're going to the upside like that. Again, just like I showed you in the Russell, you need to see this market push first back above these levels and then continue to build as much of a V shape as possible, and with quite a bit of strength, and then I would consider this being a you know, some kind of an expanded flat with a break to the upside. All right, so for right now, I think you know, the financials are pretty much in trouble. And if you look, but I think they're running into their kind of the final stages, at least of this initial decline, and then we'll see what happens. So there could be some opportunities for these bounces coming, not just yet. I talked about it on Twitter too quickly. But, you know, there'll be, after this kind of 5-wave sequence finishes off, there'll be, you know, some kind of a retracement in here. Either you're beginning something bigger or you know, you're doing maybe a second wave or something. But there'll be some opportunities to kind of get them long. And if you want to take a look at, you know, who's in here, I mean, all you got to do is just look at, you know, right here at the top holdings and take a look at the Berkshire Hathaway, JP Morgan, Bank of America. These are the kind of the top 1, 2, 3, 4, 5, 6, 7, 8, 9, the top 10 holding into the XLF. And you can see at any of these more, I mean, they've been pretty well crashed. Not as bad as obviously some of the, you know, regional and smaller banks, but any one of those, you will see their counts and you'll see, and you might be able to pick some interesting stuff out of here. Just look inside those wave counts and you'll find out a little bit better. But you know, these are the ones that are basically the top holding in the XLF sector. All right, let's jump over and take a look at Bitcoin. So again, just a flat 100-day moving average. This has been kind of declining all the way back to, you know, the beginning of January, and then we had this kind of massive rally after this lows, and we've been flat for a while. The market kind of came back, retested it back in here at about 20,000 via flat formation, and we've gone to the upside. So let's let's take a look at the counts, and you know, I'm providing updates on this on that daily drip. If a low is in here in a wave 5, right, that means that this market should continue to push, you know, much higher, right? That was a wave 2 of a flat and an expanded flat, just like you saw right in financials just a little bit while ago, you know, that possibility, although that was a little bit deeper. And then that's what you want to see. After you have a flat, you want to see a move like that. That kind of confirms it and tells you that it's very likely that this will continue much higher. The next obvious target, which I think will get hit, it's 32,383, which is the swing high, along with some previous levels from, you know, spring, early summer of 2021. And then, you know, then you're looking also in March of 2022, so about a year later. You know, so this level, it's a big level right here towards 33,000. You know, maybe go a little bit higher, maybe just below that, but I think this is where we're going into this move. And if it's a wave 3, then maybe wave 2 was done, and this is what's happening right now. You're doing a 3, a 4, and a 5. You know, it could take it way above there too, right? If this was all of the wave 2, or if I go to a smaller time frame in here, maybe this wave 1, it's misplaced, and you're actually into some kind of a 5th wave right now, and wave 2 still needs to come. Because this was a very short, which I did say into the updates, it's a very bit short compared with this rally in time and in price. But when the markets are strong, again, they're not giving a lot of chance to people to get in. So am I missing? Maybe this is still a fourth wave in here, right? Maybe a 1, 2 in here, 3, 4, and 5, and we're running into the final stages of this wave 1 is very possible. Then do maybe a second wave pullback, again, just back toward this area, towards 25,000 back, and then push higher towards this 33,000. That is pretty much the question, right now on this. But either way, I think that these levels will get tagged, right? This can continue to just kind of build and just continue to, do a little bit of a pullback next week, and then continue to kind of climb back to the upside in here. So, looking at this daily time frame, right? If we had a major low last year and we're beginning the next advance higher, then that's how we go. And we continue to just build and build and build, and we'll climb above there. We can take a look at some targets for a wave 3. A standard one would be 40K. God knows that things are always standard, right? Right, just kidding. Right there. That would be kind of the next obvious target for this third wave, and then we will do a 4 and 5 and then begin the next sequence. This is if, let's say, in Bitcoin, this whole thing, let me just see if I can stretch this up a little bit in here, right? If this whole thing was an ABC, some kind of a flat. I don't really like this flat. It's quite disproportionate, but that's the only way you can kind of go and overtake, let's say, these highs and move above $65,000 in Bitcoin and just make new all-time highs and continue to push by building this impulse. I mean, if you're seeing a pretty big impulse out of here, things are going to be clear. Now, take a look at the kind of the bearish side of things. If this is a wave A in a 5-way, 1, 2, 3, 4, 5 in here, right? Then this could very well be just a simple ABC, and Bitcoin finishes off, at some kind of equality between between wave A and wave C, which comes at about 30,000, right? That is this level that we were just talking about just a little while ago, right there. That's 30,000. That's equality between wave A and wave C. That finishes off, and then Bitcoin begins the next decline. This is the risky part. This is kind of the scary part of what's happening right now. That the market shows you a 5-wave decline from the highs, and this whole rally in here is nothing but a B wave. Right, and if it's a B wave, then the next move will be lower in C, and I can only imagine kind of what happens to stocks and to the rest of the markets if this is the correct count, and some of those kind of iffy counts in the S&P 500, in the Dow, let's say in the Russell, are starting to kind of work their way lower. Right, then Bitcoin is probably going to do the same. So that's why we're at a very important junction between, let's say, the beginning of a larger bull market in all the risk assets, or just having a big head fake in here in Bitcoin in the equity markets as well, and then the next leg lower to begin overall. So I don't think that this has got enough room again to be built as a 1, 2, 3, 4, 5. It's possible it would just kind of extend it more, right? So you would have to go, if this is just wave 1 of C, then you would have to go 1, 2, 3, 4, 5, and by that time you will just kind of get too high for this to be, not necessarily too high in terms of a B wave, but I think by that time, the whole story with the markets will probably change, right? I mean, if Bitcoin rallies all the way to 40K, I would assume that the rest of the markets are already beginning their bullish move. And so basically, bottom line is that the chance for a head fake in these markets, it's pretty much you know, like right here between this kind of 27 and 30K story, right? Then you would have to start to reverse to the downside. And again, how do I would judge that? Well, again, just look at whatever we're going to have, let's say a top in this wave. And then, you know, being, let's say that if you go all the way up to 30K, then if you start to kind of come back below 25, below 23, then you know that this was an ABC and you're likely to move lower. As always, markets could get complicated, and just to kind of throw this out there, you know, but if you've been doing Elliott Wave for a while, you're already familiar with this, right? If this is an ABC, you can always do an X and then another ABC, right? That's the fun part about, you know, corrections. If it is indeed one, right? We'll see. We'll take it one step at a time, one wave at a time in here. But the encouraging part in here is that you had a 5-wave move from the lows, followed by a nice pullback, and now you're beginning kind of the next advance higher. So we'll see how it is. If you want to stay in touch with you know, the latest analysis in here, I will have something coming up on Monday morning. It should be in your inbox. After we'll take a look at the Sunday futures. We'll let the day pass, obviously Sunday, and you know, then we'll continue to kind of take a look at discounts and see where the next you know, levels are and opportunities in this market. So once again, I appreciate you as always for being here. If you want to take a free trial, it's a free 30-day trial for my program on Telegram. Go ahead and give that a try, see if you like it or if it fits you. Otherwise, follow me on again on Substack at Elliott Wave Cafe up there, and also on Twitter. All right, don't forget to subscribe to like on YouTube as well, and I'll see you next time. Bye bye.